Gold has always held a unique and powerful position in human history, not merely as a precious metal but as a symbol of trust, stability, and survival during times of uncertainty. And in today's world, that role has become more important than ever as global geopolitics enters one of its most volatile phases in decades, marked by shifting power structures, rising conflicts, economic fragmentation, and declining faith in traditional financial systems. Across the globe, tensions between major powers such as the United States and China, ongoing frictions between Russia and NATO, instability in the Middle East, and increasing political polarization within nations are creating an environment where uncertainty dominates decisions. And whenever uncertainty rises, gold naturally moves back into the spotlight because it represents something no paper currency or digital asset can fully replace: independence from political control. Unlike fiat money, which can be printed endlessly and influenced by policy decisions, gold is finite, tangible, and universally recognized, making it a natural refuge during geopolitical stress. In recent years, this has been clearly visible as central banks across Asia, Europe, and emerging markets have accelerated their gold purchases, not for short-term profit but as a strategic move to protect national reserves from sanctions, currency volatility, and over-reliance on the US dollar. A trend often described as where countries seek alternatives to dollar-based systems due to growing concerns that financial infrastructure can be weaponized during geopolitical disputes. Sanctions, asset freezes, and trade restrictions have shown governments that holding reserves in foreign currencies carries political risk, while gold, stored domestically, remains beyond external control, reinforcing its importance in a fractured global order. At the same time, inflation and record-high global debt, levels largely driven by years of stimulus spending, conflict-related expenditures, and supply chain disruptions, have further strengthened gold's appeal as a store of value, since inflation erodes purchasing power and weakens currencies, pushing both institutions and individuals toward assets that historically preserve wealth. The relationship between gold and the US dollar also plays a crucial role here, as gold is priced in dollars globally, and while a strong dollar can sometimes pressure gold prices, periods of intense geopolitical risk often override this dynamic, allowing gold to rise even when the dollar remains firm. Because fear and safety outweigh traditional market correlations, investors, too, closely watch geopolitical developments when making decisions about gold. Not because gold generates income, but because it offers protection against worst-case scenarios: wars escalating, trade routes disrupted, energy supplies threatened, or financial systems Modern geopolitics is no longer limited to military confrontation alone, but includes cyber warfare, economic sanctions, technological rivalry, and control over critical resources, all of which increase systemic risk and uncertainty, reinforcing gold's relevance as a hedge against complex, unpredictable outcomes. Even in the age of cryptocurrencies and digital assets, gold continues to outperform as a trusted safe haven during global crises, largely because it has thousands of years of historical credibility behind it, whereas newer assets remain volatile and untested during prolonged geopolitical stress. Psychologically, gold also plays a powerful role, as during increasing markets are driven not just by data, but by emotion, fear, and instinct. And gold benefits immensely from this behavioral aspect, because people instinctively trust it when confidence in institutions fades. Looking ahead, the future of gold is closely tied to the trajectory of global geopolitics. And while short-term price fluctuations are inevitable due to interest rates, economic data, or currency movements, the long-term outlook remains strongly influenced by the reality that the world is moving toward a more fragmented, multipolar order where cooperation is harder, competition is sharper, and risks are more evenly distributed across regions, a setting in which gold historically thrives. For ordinary people, gold's importance lies not in speculation but in stability, serving as a form of financial insurance against inflation, currency depreciation, and political uncertainty, whether held as physical gold, investment instruments, or part of national reserves. Ultimately, gold's enduring value comes from its ability to remain relevant across eras, surviving imperious monetary systems and ideological shifts, and as long as geopolitical tensions, power struggles, and economic uncertainty continue to shape the global landscape, gold will remain not just a commodity, but a mirror reflecting the fears, priorities, and realities of the world we live in today.